Trading is incredibly simple. You only need to understand these 5 concepts in order to consistently make money. Now, the first concept you need to understand is higher time frame direction. So this essentially means, are we in a bullish trend or are we in a bearish trend? Now, continuing on from this, the next step is to identify higher time frame market structure. So this is where we're drawing on the breaks of structure, changes of character, and identifying the current bullish leg. So for example, here we can see that the current bullish leg is between the low and the high, and now all we're waiting for is a retracement into this range to then continue buying. Now, this is where the next concept of liquidity comes into play, because it's going to give us an indication of where price is likely to pull back to. So as a general rule, what we're waiting for is for price to pull back, sweep some previous buyers in this range, and then that is where we're looking to buy from. So for example, down here, we can see that GU was bullish, came back down, swept some previous buyers and these 2 wicks right here, and then starts to react. This leads us over to the fourth concept, which is this idea of supply and demand, which is going to be the foundation of where we get our entries. For the entry, all we're simply looking for price to do is flip back bullish in line with the higher time frame on the lower time frame. We're then looking to identify an area of imbalanced demand. We're then looking to enter on this demand and buy up to target some previous levels. And finally, the fifth and final point is risk management. So this is when we're going to be simply risking 0.5 to 1% of our account per trade. This is going to ensure we're only risking what we can afford to lose, and it's going to pretty much make it impossible to blow our account and ensure that we have some sort of longevity in trading.